Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
Welcome to the Statler Financial Radio Show. I'm Stephanie Griffin, and I'm joined today by Philip Statler, president and founder of Statler Financial. When it comes to planning your retirement, there's only really one question that matters. Are you truly ready to retire? It may seem like a simple yes or no question, but if you dig a little deeper, you may find some very important decisions to make. Today, Philip will help us through this. Hello, Philip. How are you?
Hey, I'm doing well, Stephanie. I hope you are too. It is, I know people probably don't realize this, but you are like in the Midwest and I'm down south.
Yes.
So you're getting a little cold weather right now.
A little chilly out. Yeah, we're ready for the springtime here. So, I get tired of wearing those sweaters all the time. I want to be able to put the shorts on and T-shirts on and go. But yeah, it is what it is, I guess. Right, Philip?
Yeah, that's right, man. We actually went camping last weekend. So, it was nice and warm.
You're making me jealous. That's not nice.
Like a fool.
Well, let's start this show off so you stop making me jealous. Before we get into the financial side of things, why is knowing when to retire about more than just your finances?
Well, Stephanie, that's a great question because while having a solid financial plan is really and truly a foundation, that is foundational that we need to have. Retirement is also a huge emotional and social shift. It's a big change, not just financially, but that emotional and social shift is huge. I see it all the time with folks. And so for many people, you got to understand their job is who they are. I mean, that's a core part of their identity. And really those people at work are a lot of times their social circle. That's their friends. And that's, they may not have many friends outside of that social circle there. So stepping away from that requires a couple things. It requires that we prepare mentally and emotionally for that separation because it is a separation. I've seen it where it'll bring on depression if people haven't planned properly for this separation between working and retirement. And that's why I look at a holistic approach. And it's so important to make sure that planning is not just about the money, it's about the time. What are we going to do with our time during that period as well, Stephanie?
It would be a big change. It really would. Let me give that number before I forget to do that. 863-877-1188. You can text VISIT to 863-877-1188 to get your complimentary visit with Philip. Maybe a good time beginning of the year to ask questions about how you're doing in retirement. Philip, what is the first financial sign someone should look for to feel confident about retiring?
Well, I think one of the most important things or one of the important signs is to have a detailed financial plan. We know statistically that less than 30% of the folks out there actually put together some kind of financial / retirement plan other than I'm going to draw from this account or that account. That's not a plan. So this isn't just about how much you saved. It's really about knowing how you're going to generate income for now potentially 20 or maybe even 30 or 40 years that you may be in retirement. I mean, I saw the other day, somebody celebrating their 104th birthday.
Wow.
Right. So we, even though, maybe only 3 or 4% of us will make it that far, we have to plan because I don't know if you're in that 3 or 4%. So we have to plan for that. It means also that we have to budget for all your expected expenses. And that we can get a clear picture of how much income you're going to need and what your income sources are, like your pension, your investments, and your Social Security. All of this goes into play and helps, really identify what gaps we may have and ensures that your assets are structured to last as long as you do. And that's really a key part in the planning process.
So what is another key financial area retirees need to have in order before they stop working?
Well, I mean, having a minimal or no debt, Stephanie, that can be a huge indicator of readiness, right? I see way too many people carrying debt, especially high interest credit card debt, and they're going into retirement. And that is a major drain on your income. Every dollar that goes towards paying off debt is a dollar that you can't use for living expenses or enjoying your retirement. So, if you can retire debt free, that is great. Now, maybe you have a low interest mortgage. That's okay, because typically you're going to make more than that interest on the mortgage is going to be. So that will probably be manageable. So heading into retirement debt free, except for maybe a low interest mortgage, right, provides incredible financial flexibility.
Yeah, I can't imagine how stressful that would be when you have a huge debt and you're not working. And I just can't even imagine.
It is stressful. It really is.
What about Social Security? How does that factor into the decision?
Well, I think that having a detailed Social Security strategy is also a critical part of the puzzle and the planning process. Folks can start claiming their benefits as early as age 62. But I'm going to tell you, doing that permanently reduces your monthly payment. So look, if you can wait until your full retirement age, which for most folks listening out there, that's 67. Some of you, it may be 66 in some months, but we're all getting in that range right now. It's even better if you can wait until 70, because then your monthly benefit will even be significantly larger than at full retirement age. And that extra inflation protected income that you get from Social Security, it's a powerful tool for your long-term financial security. The other thing people don't really realize, and it's the way I really try to position it, is that for a married couple, the longer you wait, the benefit to the remaining spouse may be higher. And it gives them kind of a death benefit to help offset some of their other expenses. Listen, folks, if you're not sure whether you're truly ready to retire, one of the best things you can do is get a second opinion. If you're listening right now and you saved at least $250,000 for your retirement, give us a call here at Statler Financial, 863-877-1188. I'd like to talk to you. Make sure that you have everything put together, that you've got a plan in place that's going to get you into and through retirement. That number one more time, 863-877-1188.
And I know you have tax season coming up, too. So give him a call as well for that. If you're just joining us, we're talking about ways to see if you're truly ready to retire. Philip, let's talk a little bit about retirement expenses for a bit. What is a major expense that people often underestimate in retirement?
Well, there's two that I can think of off the top of my head, but probably the biggest one is going to be healthcare. So even with Medicare, right, which you're eligible for at age 65, healthcare isn't free, folks. There's still a premium that has to be paid and copays and other out-of-pocket expenses. So it's not free, and it continues to go up. If you retire before 65, you'll need a plan to bridge that gap, because from the time you retire to the time you hit 65, you've got to have medical insurance, and it can be very expensive at that point in time. So, I have clients that will continue to work to 65 just because of that. It's crucial that you figure that into the planning process. And then there's always the potential for long-term care needs, which folks sometimes don't realize, but Medicare generally doesn't cover those expenses.
Yeah, there's a lot of questions about Medicare and Medicaid. And so give him a call for sure. Give Philip a call and ask him any questions you have about that. 863-877-1188. That's 863-877-1188. And beyond the numbers, what's a sign that someone is emotionally prepared for retirement?
Well, here, Stephanie, what we're really talking about is identity. Do you have an identity outside of work? Being emotionally ready often means that you've started building an identity outside of that career, outside of work. Whether you're actively involved in a church or a civic club, those things give you some other identity other than just at work. If your job has been your main source of purpose and social connection for decades, folks, listen, retiring can leave this huge void in your life. So emotionally, we have to prepare for that. Often, you need to figure out your hobbies, your interests, and relationships outside of the workplace, that they're excited and that you've got to be dedicated to spending more time to build those type of things.
Now, is there anything else people should consider before taking that giant retirement leap?
You should have a clear idea, Stephanie, of how you're going to spend your time. Folks, listen, after working 40 years, having a completely open schedule, that can be shocking, right? It can be overwhelming to some people. It's important to have a plan, whether it's traveling, volunteering, learning a new skill, or spending more time with family and friends. You need to have a purpose in retirement. That, I know, is a critical thing. Folks need to make sure they have their hands wrapped around that.
So, what's the most important thing you think, Philip, for our listeners to consider doing right now to get ready?
Well, I think now, Stephanie, it's easy to sit back and do nothing, but it's time to take action. Do something. Start the process. Don't wait until you're a year away from your target retirement date to decide, oh, I need to put something together. I tell people, look, 5 years before and 5 years after you retire, that is a critical 10-year window of time that you need to get it right. Start planning for all the aspects of retirement now. Folks, listen, if you're listening to me right now and you saved at least $250,000 or more for retirement, I want to personally invite you to schedule a time to meet with me. This is your chance to help gain clarity and confidence about your future. Here's what you can help. Here's how I can help you in those situations. We'll review your complete financial picture to see if you are truly on track for your retirement goals. And we'll identify opportunities to help strengthen your plan, from your withdrawal strategy to your healthcare plan. And we'll help give you the confidence that you're ready for the financial and emotional transition to retirement. There's free, no obligation, but spots do fill up quickly. Our calendar does fill up quickly. Give us a call, 863-877-1188. That's 863-877-1188 right now to schedule your appointment. Again, that number is 863-877-1188.
Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor. Time to retire right. This is the Statler Financial Radio Show.
Welcome back to Statler Financial Radio Show with founder and president Philip Statler of Statler Financial Services. Philip is here to help you with tailored financial guidance. There are so many questions, and he will help answer those for you. Call him at 863-877-1188. That number again is 863-877-1188 to sit down with Philip for a free visit. He'll help you make sense of where you are in retirement. So let's get to our topic of retirement optimism now, Philip. A recent global study found that fewer and fewer people felt optimistic about their retirement. In fact, just over 30% of people believe, which I think you mentioned that earlier, they believe that they'll live as well or better in retirement as they did while working. Now, that's a major drop in confidence, actually. So, Philip, is this just a feeling, or should we consider this a new retirement reality?
Stephanie, unfortunately, for many retirees, it's much more than just a feeling. There are real challenges in the modern day retirement era. First, we have high inflation, and that is a top concern to folks, higher than we've seen in a long time. People see their savings buying less and less, and that creates a lot of uncertainty about the future. Second, we're all living longer. A 30-year retirement plan is quickly becoming obsolete. And you think about that, if you're retired at 65, we're talking about 95. And now it's not unusual to see somebody live to 100, 103, 104. I'm seeing on a regular basis now pop up. So, that 30-year retirement plan is quickly becoming obsolete. Many people need a plan that can last 35, 40, maybe even more when it comes to years in retirement. And finally, so many of the old guarantees are gone. The responsibility has shifted from the employer to the individual. That's you. You're now responsible for most everything when it comes to retirement, except for maybe Social Security. So you're now the CEO of your own retirement plan. And that can feel overwhelming without having a clear strategy in place to help follow through.
Yeah, overwhelming is right, but I kind of like the title CEO. I like that. So, Philip, if the old rules no longer apply, how can our listeners move from feeling anxious to feeling confident about their financial independence?
Well, confidence comes from having a clear written plan that addresses these new realities. And again, I say this a lot on the show that there's less than 30% of the folks out there actually have a written retirement income plan or any kind of plan in place. And so it starts with shifting your mindset from just accumulating savings to creating a durable, lifelong income stream. That's the key. We have to create our own pension, in other words. This means diversifying your income sources. You can't have all your eggs in one basket, especially one that's tied directly to stock market volatility. The study you mentioned also showed that people who work with a financial professional have more clarity and confidence in their retirement. Getting that one-on-one guidance is the most effective way to understand your options and to build a strategy that's tailored to your specific goals and timelines.
Now, if you would like to text Philip, you can text the word visit if you'd like to do that to 863-877-1188 to get your complimentary visit with Philip Statler, 863-877-1188. Now, you mentioned diversifying income. Let's talk about that a little bit. What does that look like for someone who wants to help protect their essential expenses, from things like inflation and market downturns?
Well, a strategy is to build a floor of reliable, predictable income to cover your non-negotiable costs. Things like your mortgage or your rent, if you have that, utilities, healthcare costs, the basics. We need to have those things covered. Now, this income can come from sources like Social Security benefits. Maybe you're fortunate enough you have a pension coming in, or other protected income solutions, something that's not going to be affected by the ups and downs of the stock market. Once your essential needs are covered, you can then use your other assets like your 401k, your brokerage accounts for growth and discretionary spending. This approach helps insulate your lifestyle from those volatile market swings that we've seen over the years. Listen, folks, if you're worried about your retirement, one of the best things you can do is to take action. If you're listening right now and you've saved at least $250,000 or more for retirement, give me a call at 863-877-1188. I'd like to offer you a free, no obligation analysis. But again, our calendar fills up quickly, so don't hesitate. Give us a call now to schedule your appointment. 863-877-1188.
So, Philip, with so many people feeling uncertain, how do you help your clients map out a plan to create that reliable income that they can count on for decades?
Well, I think that one of the things I'll talk about is our core retirement design is really the approach we take, Stephanie. And it starts with a complete risk analysis of our current situation, our current portfolios. What does that look like? How much risk do we have? Is it where we should be? On a scale of 1 to 100, do we have the right amount of risk in our portfolio? The second thing we look at is vitally important is taxes. People don't realize in retirement, you still have to file an income tax return. And typically you still end up paying taxes. And that number can escalate as your RMDs have to start coming out at 73 or 75. And so that's the second phase. Third thing is creating that income. Creating that roadmap to follow that says, this is where my income's coming from now. This is where it's going to come from later. And figuring out what that looks like and creating some guardrails to say, okay, as long as my portfolio is where it is, this is how much income I can take. If my portfolio drops, I'm going to have to take a pay cut. If my portfolio goes up, I might get a raise. So it's having that all written out and mapped out so people understand where their income's coming from and what that income number looks like for them right now.
Now, that study we're talking about found that a lack of clear benchmarks is really what undermines retirement optimism for people. So for our listeners who are wondering if they are on the right track, Philip, what's the first step they can take to get that clarity?
Well, I think when we look at that, it's there's so many people that I meet with, they're looking at a benchmark. And what is a benchmark? That's what you measure your performance against a lot of times, right? Here's the benchmark. And so a lot of people look at the S&P 500 or they look at the Dow Jones Industrial 30 and they say, well, this is my target. Folks, if you're in retirement, that should never be your target because the risk in the S&P 500 by itself is more than what you should be taking in real terms. And so I think having the right benchmark, how should your portfolio be doing versus a benchmark? And creating the right benchmark is important. And we look at that and we go through that process when we walk through one of our core design, because that is part of the deal. We need to know, what are we building on? What are we going to do to get us into the right place? I think other things we need to do in terms of benchmarking outside of finances and portfolios is we need to have a plan of how are we going to determine if we're doing well in retirement. You need to have some benchmarks there too. How often are you getting out of the house? How often are you socializing? How often are you spending times with friends, or how much are you spending time with family, and laying that out before you retire? Like one of the rules we have in my household, and I'm not retired yet, but it's still one of the things that we do is that, I have grandkids that live not in my backyard, right? They live further away.
Yeah.
And so, one of our things is that, look, we're going to see our grandkids at least once a quarter. Whether that means we have to get on an airplane or we have to help fund them coming down, whatever that is, that's a benchmark. We're going to hit that benchmark of seeing our grandkids at least once a quarter. So I think having things like that in place, it really and truly does help in the planning process, Stephanie.
All right, we're going to kind of switch gears a little bit, Philip. I want to ask you, tax season is coming up. It'll be here before you know it. And I know everybody's thrilled about that, by the way. So what do you have, or what do you do for folks listening right now for tax season? How do you help?
Well, so a couple of things. One, right, is we help a lot of our clients look at taxes in perspective of doing Roth conversions or things like that. But the other arm, we have Statler Financial. That's our financial planning, our retirement planning arm of our businesses. But I'm also a partner with a tax entity called Heartland Tax and Accounting, where we actually prepare taxes. We have a full slate of accountants that do bookkeeping and accounting work and analysis and that type of stuff, as well as obviously this time of year doing tax returns. So, we are here as kind of a full service firm all under one roof. So we've got the investment side, we've got a group that does taxes. So we can kind of handle the full gamut of, look, when you're looking at investments, look, it's just not about investments. You got to understand the tax consequences of what's happening as well. And that's where we rely on our relationship and our partnership, literal partnership, because I am a partner in that group of Heartland Tax and Accounting. And so that helps out tremendously. So in that process, and it really does tie together. I have a lot of folks that have become investment clients because we can also help them on the tax side, and we understand that part of it implicitly. And that's a big deal to a lot of people, is how can I be as tax efficient as possible when it comes to, doing everything, planning, retirement planning, because taxes don't go away. We still got to mitigate them somehow.
All right, some good information there, Philip. We appreciate that. Keep him in mind when it comes times to do taxes. You don't have to worry with him. Let Philip do that. Stay tuned. When we return, we'll dive into one of the biggest retirement fears: running out of money. The Statler Financial Radio Show will be right back.
Needing a second opinion on your retirement plan, or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
Welcome back to the Statler Financial Radio Show with Philip Statler. I'm Stephanie Griffin. We've been talking today about the growing anxiety that many people feel about retirement. One of the most common fears people have is the possibility of outliving their savings. Philip, let's talk about this. What's one of the biggest threats that could derail a nest egg right at the beginning of retirement?
Well, Stephanie, it's called the sequence of return risk. Now, this is the risk of experiencing what we call poor market performance in the first few years after you stop working. Remember, and you may not remember, but back, I think the last segment or segment 4 somewhere, I talk about this quite a bit, is that the 5 years before you retire and the 5 years after you retire, that 10-year period of time is vitally important. And the sequence of return risk, if you're on the losing end of that, can be detrimental to your retirement planning process. You need to make sure you have a plan that's going to deal with that. So those first 5 years of retirement are really fragile. If you're forced to sell investments in a down market to fund your lifestyle, you're selling more shares at a lower price, which dramatically accelerates how quickly you deplete your savings. So listen, two people can have the exact same average rate of return over 30 years. But if one has bad returns at the first, say the first 1 or 2, 3 years, and the other has bad returns at the end of that 30 years, their final account balances can be drastically different. The person with early losses is far more likely to run out of money. And Stephanie, I want to share a personal example with you.
Okay.
That I have seen. This happened back in, I met with this person back in 2009. And in 2008, in January, when I looked at their statements, they had an IRA of $1.5 million. Now, everybody remembers what happens in 2008.
Yes.
The market was in steady decline, right? Now, this gentleman was taking about 5% out of his portfolio, which is more than I would recommend, but that's what he was doing. And so in that 5-year period of time, in that 1 year period of time, right, he was taking out 5%. So he was taking about $75,000 out of his account. His account dropped by 50%.
Oh my gosh.
Actually, a little bit more than 50%. And that was because he was having to sell more and more every time he needed money for his monthly distribution.
Wow.
And so that was huge for him. And so he did not become a client. He did take a little advice, though, and reduce the amount of money he was taking out every month. And so hopefully he kind of shored it up. But that's what can happen. And we need to be careful about that when we look at sequence of return risk.
Yeah, that happened fast, it sounds like, too.
It did.
Yeah. Well, what are some practical strategies our listeners could implement to help protect their portfolio from this risk, especially in those critical early years of retirement?
Stephanie, it's about building that income floor, having, and you do that by having reliable income sources to cover your essential expenses, so that you aren't forced to sell your growth-oriented asset at the worst possible time. So we use a bucket strategy, and you can set aside 1 to 3 years worth of living expenses in a safe, or at least safer bucket, right? Maybe it's cash equivalents. Maybe it's we have what we call ultra conservative portfolio, which is more in those type of investments. And this really kind of buffers you from the ups and downs of the market. So when the market's down, you draw from the safe bucket. When the market's up, you can refill the safe bucket by selling some of your appreciated assets, some of the stocks that have made money. This strategy allows your long-term investments the time they need to recover without you having to touch them. So that's what's important, is time can be more on your side this way.
So beyond market risk, what are other key areas should people focus on to help ensure their money lasts for the 30 or 40 years of retirement?
I was saying the other thing that people need to look at is you need to manage your withdrawal rate. So many people think that the old 4% rule is the standard, and that may really and truly not be suitable for you or for anyone else out there, especially with the longer lifespans and the changing market conditions we're seeing. Your withdrawal strategy needs to be dynamic and flexible. The other thing is tax planning is a huge factor. Think about it. A surprise tax bill can be just as damaging as a market loss. Strategically planning for taxes on your Social Security, your RMDs, and other income can significantly reduce the strain on your portfolio. Listen, folks, taxes are a big deal, and we need to make sure we plan for them. And that's where having some flexibility and that type of thing really comes into play. And finally, you must have a plan for healthcare and the potential for long-term care costs. These are the biggest wild cards that can unexpectedly drain a nest egg if not properly planned for. I have a client now that His spouse has gotten to the point that it can't be at home anymore. And we had, prepare to move her into assisted living. And so we had to figure out how we're going to pay for that. Because he didn't really have a plan in place, didn't have a long-term care insurance, didn't have anything else he has portfolios to draw from. So we're having to create and go back in and figure out how we're going to pay for long-term care. Not impossible, but one of those things we didn't have an insurance policy for, so now we're going to have to figure out how to self-pay that stuff. Now, I know these things can sound complicated. The good news is you don't have to do it alone. If you're listening right now and you've saved at least $250,000 or more for retirement, give me a call at 863-877-1188. I'd love to help you. Folks, this is a free, no obligation analysis, but our calendar does fill up quickly, especially this time of year. So give me a call now to schedule your appointment so we can sit down and make sure you're at the right spot for your retirement. That number one more time, 863-877-1188.
Yeah, you can also text the word visit to 863-877-1188. It is the Statler Financial Radio Show right now. Maybe you feel like you have an advisor that gives you cookie cutter advice. This might be a great time to talk with Philip, and he'd like to plan a tailored retirement plan just for you. 863-877-1188 is that number. It's clear, Philip, that making your money last requires more than just, a good investment plan. It takes a comprehensive retirement income strategy that coordinates all these different pieces. For someone listening right now who is worried about their plan, what's one of the most important actions they can take?
Well, I'm going to say the biggest action they take is to do something. Start the process, right? Let's make sure that you have a plan in place, not just in your head, not that your advisor says, yeah, we got a plan. What is it? Is it written down? Can you look at it every year? Do you look at it every year and compare it with where you are right now? That is key. Is having that written retirement income plan. Folks, listen, those folks that have a written retirement income plan are more apt to be successful in making sure they don't run out of money in retirement. That is a key thing that I know has helped people in their retirement lifetime. I'm going to say that's the number one thing people need is they need a plan. And they need to review that plan at least annually to make sure they're on track with everything that's in the plan. And that's one of the things that's key to us is that we want to make sure that folks are on target with the plans we put together. And I think a lot of people don't get that. And that's just one of the things that I think is important, Stephanie.
What about a stress test? How does your team approach a stress test for someone's retirement accounts?
Well, obviously there's ways to do that. We have some software that will take your current portfolio and go back and back test it against 2008, in the market downturn we saw then. Some of them will actually go back to 2000, to the dot-com bubble, and stress test a portfolio there to see what it does. It will stress test it for like COVID, what happened then. So I think it's important. Because here's what I learned in 2000, right? In the first big market crash, is that a lot of people thought that they were moderate investors until that time frame. Because a moderate investor portfolio was down 15 to 20% during that time frame. And so a lot of folks realized then, if they didn't realize it then, they sure as heck realized it in 2008, that they really weren't moderate investors. They were conservative investors. And so that's really what this stress test really shows somebody, is that information. And so we want to make sure that people understand that the risk is real. When the market drops, it drops. And people can get really uneasy and their stomach can really start to give them a hard time. And so we want to make sure that we offset that and make sure we have the plan in place that's going to get them through that, and know they don't have to see the whipsaws that a lot of folks are dealing with. That's the key of stress testing. Listen, folks, again, if you are 3 or 4 years out from retirement, or you are already retired, it is vitally important that you have a written retirement income plan. And that's what our core retirement design does. It creates that for you. Give us a call, 863-877-1188. Look, I don't want anybody to be stressing out about running out of money. My goal is to help everybody I can have a written retirement income plan so that they know without a doubt where their money's coming from, and that they can rest comfortably in knowing that it's going to last throughout their lifetime. Give us a call today to schedule your no obligation consultation. 863-877-1188. That's 863-877-1188. I'd love to hear from you.
And that's what I love about you at Statler Financial, Philip. You let people go in, you talk to them, you don't talk at them, you help them understand, and if they have questions, you are happy to answer them. So please give him a call for a sit-down, a free consultation, 863-877-1188. And the Statler Financial Radio Show will be right back.
Do you have a retirement plan but would like a second opinion? Call Philip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor.
Sounds like the mailman's here.
It's time to answer questions from the Statler Financial Mailbag.
Welcome back to the Statler Financial Radio Show with Philip Statler is with me right now. Over 2 decades of experience in financial services. I think that's terrific. And we are kind of getting into the fun stuff here with the mailbag questions. I love these, Philip. These are a lot of fun and some really good questions from the listeners as well. So let's go ahead and get started on this. Our first question is from Jean from Sebring. Jean asks, I'm still quite a few years away from retirement, but I have no idea what my savings target should be. How much might I need to save so I can have a comfortable retirement? That's a common question, isn't it? A lot of people are wondering that.
It is. It's a very common question. We talk about a lot on the show, but it's the wrong question, right? So we need to look at it from a different perspective, because we don't know how much you need until we know how much you're going to spend, right? So the key is spending. What does your spending budget look like in retirement? And that's the key. And nobody likes a budget. I get that. I don't like it either.
The horrid B word, yeah.
That's right. Nobody likes that word. But you have to have an idea of what you're going to be spending in retirement. Whether that's I need a new boat because I want to go fishing all the time, or hey, I'm playing golf like it's my job. I have a client that did that, right? They played golf 5 days a week. That was their job. They took the weekends off. And so, so that's the first thing to look at is how much money am I going to need for spending on an annual basis? And once I get that number, then I can help you figure out how much you need to have in your bucket at retirement to pay for all the spending. So that's the key, Gene, is tell me how much you're going to need to spend on an annual basis. Then I can tell you what you might need to have saved for a comfortable retirement.
We are listening to the Statler Financial Radio Show now. We'd love you to call Philip and ask him any kind of question you'd like, or you can even text the word VISIT to go talk to him and have your free consultation at 863-877-1188. That number again is 863-877-1188. And I love the fact that you are right here in Sebring, Florida, and people listening now, they're not listening to somebody across the United States. You're right here in their own backyard. And I have Bill from Lake Placid, question from him. He says, I think I have a pretty good handle on our financial retirement, but I'm worried that I'm missing something. Do you have some sort of checklist or to-do list to help make sure I'm not forgetting anything?
I wish I did. I did it one time and it kind of got obsolete and I never revised it and put it back together. But I'd love to sit down with you and we can go through where you are and see if there's some things you can tweak, or some things that maybe you can do to put yourself in a better position. I don't have a problem with that, just to make sure that, that you're doing what you need to do and are on the right track. A lot of folks, though, when they hit that retirement stage, they're ready to hand that plan off to somebody else, right? Because, well, you're retired to quit working, not to have to keep an eye on, your finances and your portfolios and make adjustments and, those type of things. And so I'd love to sit down with you and make sure that you're on the right path, to making sure that you're going the right direction. Have an income plan that's really going to provide the income you need throughout your lifetime. And just make sure that you're going to pay the least amount of taxes possible. A lot of people, they'll put together a financial plan, an income plan, but they forget about the tax aspect of retirement.
That's a biggie for sure. Give Philip a call, 863-877-1188. That number again is 863-877-1188. These questions are from you, the listener, folks that are getting ready to retire or maybe already in retirement. Jeff from Sebring wants to know, if I'm retiring in the next 5 years or so, is it more important to max out my contributions to my retirement accounts, or should I focus more on building up my emergency fund? Really good question.
That is a good question. So I think you have to look at it in two ways. If you cannot do both, ideally you should do both, right? You should max out your contributions to your retirement plan and build up your emergency fund. Now, the question is, how much do you think your emergency fund needs to be? My opinion, and my opinion only, is I think that in retirement, you should have an emergency fund of somewhere around $25,000, no more than $50,000. There's no reason to have more than $50,000 sitting in a bank account somewhere. So that's kind of my criteria that I look at. And so if you're not there yet, I would probably start splitting them, right? Splitting them from your retirement accounts, half of it into your emergency fund, and let's see in the next 5 years if we can't get to at least $25,000 in the emergency fund. Once you do, then you flip it, start putting everything in the retirement account so that you've got the most you need there. And then it's a process, Jeff, of putting together an income plan to make sure that the amount you have in your retirement accounts is going to be enough to get you through retirement. And so that's I think that would be a good goal to accomplish. If you can, next 5 years, end up with $25,000 in an emergency fund and put as much as you can into your retirement accounts, building both of them up would be beneficial for you to retire in the next 5 years. Now, I don't know how old you're going to be in 5 years, but the other thing that you need to look at is, when do you take Social Security? If you're not going to be 67 yet, then maybe we don't want to take our Social Security yet. I mean, that's another area of planning when we do our income planning, is looking at when should you take your Social Security? What does it look like if I wait? And looking at those key aspects of income planning process is making sure that we're using our money the best way possible. And Social Security is a big deal. It's a big part of our retirement income. And again, that's part of our core retirement design, the income plan portion, is we look at the income planning, our pensions, our Social Security. How do those things all fit together to produce the income we're going to need in retirement? To get started, it's a simple phone call. Give us a call at 863-877-1188. That's 863-877-1188. I'd love to spend 30 minutes with you on the phone, making sure you're making the right choices when it comes to your retirement. That number one more time, 863-877-1188.
So after that initial conversation on the phone, and if they do decide to become a client, or if they just want to come in and visit a little more with you, what do they expect? What can folks expect when they come and talk to you?
So after the phone call, if it looks like there's some way or somehow we can help them, then we'll have them come in and go through our core retirement design process. And the first part of that process is a project where we put together a risk assessment of their current portfolio. We put together a tax plan to make sure that we can convert things to a Roth IRA, and making sure that we're being very conservative on our numbers to make sure that we make that conversion and pay the least amount of taxes possible. And then the third leg is putting together that income plan. So we put together an income plan that says, hey, look, here, based on where you are today, here's how much money it looks like you should be able to take out or have to spend, including your Social Security and your pension. Here's the number that you should be able to spend in retirement. And that gives you that confidence to know that you're not going to run out of money and be in good shape throughout retirement.
All right. Well, hey, I appreciate it. And it was great talking to you today, Philip. Thank you so much.
All right, Stephanie, thank you very much. And I look forward to next week.
Sounds good. And don't forget, you could give him a call, 863-877-1188. That's 863-877-1188. Thanks again. And we will talk to you next week on the Statler Financial Radio Show.
Needing a second opinion on your retirement plan, or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.